everyone, Mike Wolf here. Thanks for tuning in. And today I want to talk about a topic that comes up almost every single time that I speak publicly on the topic of U.S. investing for Canadians. And that has to do with taxation. It comes up again and again. And a lot of people, that's a big stumbling block for them. A lot of people are afraid to take action because of what they perceive the consequences will be of them buying a property. Now they think all of a sudden, oh, I've got to deal with double taxation, withholding taxes, there's all these estate taxes, all these negative things that they read about in the paper, and all this stuff is totally avoidable. There's different ways to deal with all these potential quote-unquote issues. Some of them are non-issues. It's just people that are not in the know make these things out to be a lot bigger than they are. So today what I want to do is I want to dispel a few of the myths for you and give you a little bit of free information and some advice. And I guess where I'm going to start is to say that it's not one size fits all. So if you've gone to some lecture or some guru that you've given a lot of money to has told a whole bunch of people in the same class that you all need this, 3-tier structure or 4-tier structure or whatever it is, I would definitely go seek advice on to make sure that you have the right structure for yourself. And it's very easy for gurus to give you a one-size-fits-all solution because they're just trying to make money off you as quick as they can. They just want to give you quick advice, and now you think you're protected and you're set up properly, and that's quite often not the case. So it's much like if you went to a doctor and the doctor didn't even ask you what was wrong with you, just said, oh, just take this pill. I just give this to all my patients. It's the same thing. If you go to an accountant, your accounting advice should be a lot different than my accounting advice because we're doing different things. So there's a number of things that a professional, and first of all I want to say that I'm not an accountant, so verify everything that I'm telling you. But at the end of the day, an accountant is going to ask you a number of different questions, just like a doctor would ask you a number of different questions before they assess what's wrong with you and what you should do to fix that problem. So an accountant was going to want to know basically what you have for assets, what you're planning on doing. Are you planning on buying properties to hold? Because passive income is taxed a lot differently than if you're flipping properties, because that's earned income. They need to know what your net worth is. They need to know what kind of write-offs you're going to have. There's a whole number of questions that they would have to ask you before they can give you a solution. So if your current structure, if you have nothing set up, great. You're starting from scratch and that's perfect. Build something that's proper for yourself. If you already have something that was set up for you by somebody who didn't ask you any of those questions, they just put you into something to make it easy for themselves, I would definitely get your corporate structure checked out with a professional. So number of different things you need to know. First of all, I get a lot of people that come to me that have been somewhere else where they have these complex structures, or sometimes more complex than what I have, and I'm doing lots and lots of transactions, and these people, and quite often they're in a position where they haven't even done a single deal yet. So sometimes buying in your personal name is the easiest and best way as long as you have proper insurance. Now I don't recommend that if you're doing this in the long term, or if you're doing a whole lot of transactions, but I usually recommend that until you have a tax issue, I mean, sometimes it's better to go out there, do some deals, make some money, and then if you have to pay too much tax in your first year or second year, not a big deal. You can fix that. But it's better than having the other situation where you have this 3-tier structure, you've got 3 different tax returns, you spend a lot of money setting it up, and each year you're paying to do tax returns, and maybe you haven't even done a real estate deal, so you're working things backwards. So once again, talk to a cross-border specialist, because I'm not saying to everybody, don't do your first deal in your personal name, because you have a lot of assets in your native country, whether it be Canada or anywhere else in the world. You could be putting yourself in a liability position. But what I am saying is that talk to a specialist first, and don't assume that what you have set up now, if it wasn't set up by a specialist, is a proper structure for you. So I invite you to contact me if you have any questions. I'm more than happy to help you, put you in touch with my cross-border specialists. And once again, not one size fits all, so if you have any questions, please do contact me. I'm more than happy to help you. Thanks for tuning in, and we'll see you in the next videos.